Good afternoon. This is Jerry Gelke with a brief update on this week's closing of the grains after the shocking, I guess you'd call it, report from the USDA where they found more bushels of corn and and actually more soybeans. It was the stocks report that we discussed the other day after the report that really moved this market. I think the acres weren't all that big a shock. And, of course, everybody knows that that'll change by June 30th, depending on weather and price. But finding more grain puts a little pressure on corn and soybeans. And, of course, the technical action and the price drop that we had put some sell signals into this market that probably the newsletter writers will be writing about this weekend and come out on Monday or on their emails that soybeans and perhaps corn and certainly wheat had new sell signals, but in wheat, as low as we are now, almost new lows for the move for quite some time. It's pretty risky going into a seasonal time that you could get a weather scare or any excuse of somebody buying their short stack, so to speak. And I think we have a lot of people short the wheat market. And also what we saw this week was a big reversal of the old crop, new crop spread, where the traders are buying old crop, which could become very short if Brazil and Argentina were to have a slowdown in exports. Somebody'd have to come to the U.S. and buy another cargo of beans. And, of course, the stocks report that said we had 60 million more bushels of beans kind of took the pressure off of that. And July beans fell and May as well. So I think that scare might be over unless it's legitimate and it gets into a long, heated battle where we see fights and so forth breaking out in Argentina. Certainly, those guys that watch the technical aspect will take a look at where we were the day prior to the crop report, and I use that sometimes as thinking to myself, I really don't know how low prices can go and when, but I know what shouldn't happen when we have a crop report like we had. Similar to the January 12th report was kind of a fundamental negative shock. We had another one yesterday. So I would say as a guide, technical guides and also any of the traders will likely be selling rallies into anywhere near where we were the day before the crop report. And that's not that far off in November beans. So I think you'll get some push in November beans to stay stable to higher in that market. Beyond me why we're higher in beans unless the market's worried about not getting them planted for some reason. But anyway, you cut it, we're going to have in excess of 500 million bushels of beans left over next fall, and for some reason the market is giving an incentive financially. It appears that we should plant more beans and at the expense of corn or something else. So I can see that. Not lasting very long, but for some reason it's there. And so, for the lack of, if you're nervous about selling into rallies, then you have to make a decision if November beans close below $9, and of course, the further we get away from 9 on the upside, the bigger the risk you have to wait and sell on that close. Because that would be significant for the market. In corn, we've got, of course, plant to market, and it's going to be nervous with respect to weather and probably knee-jerk reactions. We got 2 different reports today from 2 different people, and totally different as far as the rainfall in northern plains. A good rainfall in a couple of weeks up there of an inch or 2 or 3 even would certainly forestall any early planting of the crops and that we anticipate. But for right now, in northern Illinois, I think there are a lot of anhydrous got put on. So I know the fellow that does some custom work called me today and said he's putting it away. If I didn't want anything done, he's putting it away for the year and Saturday, and he won't be doing anything after that. So that's how quickly we got stuff in the ground. Any wet holes, they got done. So that being said, I don't also feel that we're going to see a big capitulation or capitulation in general as far as prices just falling out of bed. More than likely, you're going to see two-sided affairs during the week, and on the downside, it'll take a while to maybe trickle lower or just go nowhere fast until we get advances in the crop and we get into the June time period, and then once the crop is in the ground, people are going to start adding it up and perhaps selling it. So there's still a chance left that we can get back 40% of the down move that we had in beans, and same in corn, maybe 50%, and try to attack that level where we were at before the crop report. But other than that, it's not a pretty picture technically. I'm in New Orleans. Gave a seminar this morning to about 40 financial people in the farm credit system, and pretty much most of the farmers down here are done planting corn, and they're going to plant more cotton, which we already know. And it's interesting that they say that they need to plant a few million acres. I think 9 million acres is on the low end that we'll probably ever see in cotton. And they're going to plant over 10 million acres this year just to keep the infrastructure working. In other words, most of these farmers, it'd be like you and I have an interest in an ethanol plant and a soybean crushing plant. We're going to plant some soybeans and corn just to keep the infrastructure going. And cotton's the same way, except cotton looks pretty good worldwide. There's a world reduction in supply in cotton and an increase in demand, mainly due to China, who's got an excellent GDP situation. So cotton, when it gets to 80 cents, you'll see some hedging going on, and that looks like the top end of it, unless the cotton crop gets in trouble. But for all that, the economy is good in New Orleans, wall-to-wall people, and the hotels you can't find a room in. So maybe things aren't bad all over. Other than that, I think we start trading weather in more earnest next week, and we'll see after the 3-day weekend just how the market feels going into the forecast for the next 6 to 10 days, which looks to be pretty good. And of course, remember, it always rains in April and May, but it doesn't rain every day. So first time we get a rain, it doesn't mean that the ground can't stand it. So a lot has changed in the last 2 weeks, and including the weather seems to flip-flop over to in favor of getting crop in, and the fundamentals didn't get any better in the grain. Most analysts are looking at 2 billion bushels of corn carryover for this year and next year, and certainly no lack of supplies in beans going into harvest next fall, with the carryover likely going to 500 million bushels or more, depending on our crop. And no weatherman that I talked to or listened to the seminars we've done has indicated anything out of the abnormal, other than looks like an ideal growing conditions for corn this summer, with a not hot July or August so far. So we'll see if that changes 10 or 15 times before it finally comes to fruition or not. So with that, that's it for this week, and we'll look forward to next week and see just how this market reacts. And have a good weekend. Happy Easter.